Good morning, welcome to the Phoenix Blue Morning Update for Wednesday the 17th of May. I'm Tom Colley and I'll talk to you about the news in the markets this morning. Yesterday, clearly we had some big moves in the market. We had an extremely strong euro pushing to the long side. Obviously we saw the dollar index fall back against that. We also have seen played out more overnight a risk-off scenario. We had a sell-off on the S&P equities market yesterday. We've seen a rally in gold, and we're also seeing a strengthening of the yen. So everything pointing to circumstances in the US being perceived less positively. Let's just have a look at yesterday's news and what we've got ahead to today. We had the CPI on the pound come in yesterday morning. It came in just above forecast. The market reacted quite strongly in one direction, only to reverse in the other, and basically just gave us no confirmation from that at all. Clearly that's a figure that is being anticipated. We are aware that the Bank of England are not treating this as being any hugely of a concern to them, and will not potentially lead to a rate rise, as earnings are definitely not rising at the same level, and this is potentially driven simply by post-Brexit valuation of the pound itself. Building permits in the US disappointed. And then overnight we've had the PPI quarter on quarter for the Kiwi, which came in just ahead of forecast. It's big week for news on the pound, full stop. Today we've got the 3 month on year average earning index. That will be really significant. That will be a better measure of how the economy is actually performing in the wake of Brexit, or ahead of the Brexit negotiations. We had 2.3% for the previous figure. 2.4% is forecast. That will be out at 9:30, so stay away from that market until that has happened. This afternoon we have manufacturing sales for the Canadian dollar, and then crude oil inventories, which will also be of interest. We saw a bigger than forecast drop in inventories last week, which gave added impetus to the bullish side on crude. We are forecast a further reduction, but a lower reduction than actually occurred last week. So again, that's one that we'll be watching closely. And then significantly overnight we have the Aussie employment change and unemployment rate, and this is one of the key things in the Aussie economy at the moment, alongside prices for houses in the main conurbations. Okay, starting over on the dollar index as usual, you can see we had a big sell-off. Yesterday we broke this 98.35 level, which was the previous low for the year to date. Clearly we're down at another level. I'm seeing support, or a limited support here, at 97.80. We do have a COT extreme signal, which was ignored at this level. It remains valid for us at this subsequent level. Obviously this isn't a market that we actually trade, but we are potentially looking for some sort of pullback in this market, following what we've had since Friday of last week, which is a strong downside in this market. Over on the yen, well, the yen was holding a level through here, somewhat of a range. Yesterday it clearly broke out from that. It's currently retesting the top of this channel, which we talked about earlier in the week. We have an entry around this 113 level. Now I'll get this right in a minute. 112 level through here, being a retest of a level with confluence with that channel. Whether we get down there remains to be seen, or whether price turns before that. Or obviously we may not see that at all. We may just see continued dollar sell-off and a strengthening of the yen taking us through that trade. There's another significant level for me here at 11.25. Over on the euro, well, we saw a breakout of this level through here. This is a weekly level. Ignored a commitment of traders signal. We're coming into where we have an entry short here. This is an entry from our daily level. You can see it's clearly quite significant. We'll be looking for a reaction there in the first instance to take us back down to the top of that channel. Our initial, when we were looking at this order at the weekend, our initial plan was to take trades further to the downside, but we will be a little bit more cautious until we break back below that level to look for further levels down there, because of how bullish that move's been through here since Friday of last week. Over on the Kiwi, well, weakness on the dollar gives us a potential for this level that we traded previously intraday on Monday, I think at 74.40, 74.45, for that to break and price to come into a level through here that we've got, looking to test the confluence of this level with this falling trend line here being the upper side of the triangle that's marked there. So if we get that dollar weakness, we will see, or certainly see that level reached. Will we get the reaction we're looking for? That remains to be seen. But you can see from the charts I've shown you already, there's a number of entries there that we're looking for the dollar fall to run out of steam, or the euro bullish rise to also run out of steam and turn price at that point. Of course, we may be wrong. But although the dollar has fallen, and in the short term we're bearish the dollar, you can't get away from the fact that the US economy is the only one which has any potential to raise rates. There may be some political influence. The Trump administration is really struggling dealing with day-to-day issues, which don't really have any direct influence on policy and things like that. But confidence is potentially being lost there. Over on crude, I mentioned we have crude oil inventories out this afternoon. As you will probably be aware, we took an entry through here at 48.50 that failed. We now seem to have reversed from 49.50. We've got a double top formation there on the lower time frame, and we'll be looking for a retest of the neckline there to take that back to the short side. If that happens this morning, and gives us a quick opportunity to get our stop to break even before the news event, we'll take it. Otherwise, being very aware of how much that could move the market, we'll stay away. And even if through the news that particular move happens to the retest, then we will be out of the market, because that will be purely a risk trade. Okay guys, that's it for today. So really we're waiting to see if and when this fall in the dollar and the surge on the euro is going to continue. There were no clear pullbacks in the move on the euro yesterday, so there weren't opportunities to get into that trade on the long side. Certainly on the time frames down to about the hour, we were looking at cross pairs and on smaller time frames on intraday basis to get into that trade into that trend as it ran so strongly. Okay guys, that's it for today. Have a great day's trading, take care, and we'll speak to you again in the morning.